if there's going to be a deal or broad contours of a deal, it'll come at G20, not at this event where the president wasn't there.
But this definitely sounded like a doubling down. We've heard some softer language that's been used by administration officials recently, including Larry Kudlow. What does this tell you?
But this is what the president always does, and this isn't a criticism. This is his negotiating style of doubling down and being tough, and then staking what some might consider an extreme or hard position, and then moving more to the center. So, to me, Becky, it's way too early to say whether this isn't going to work. I'm hopeful at some point there will be a deal, in large part because it's actually more in China's interest to have a deal, given how weak their economy is and how weak their stock markets are. To me, the U.S. is in a much better negotiating position, and the administration's policies, in my mind, reflect that.
Mike, what do you see playing out in the markets? And you were just talking about Chinese stocks.
Yeah, I mean, it's been notable to me the past couple of weeks that Chinese stocks, emerging market stocks in general, have gotten some traction. They've outperformed U.S. stocks. I don't think that's
after declining by
exactly. I don't think it's a determination
25%.
on which side has more leverage or how the negotiations might go. It's much more about, look, the hardest hit parts of the global markets have found a little bit of traction right now. That's all I'm really observing. And so I think that the markets are not saying, oh, this is a contagion event or it's going to spiral out of control. Or for that matter, I think that the next round of tariffs is all that really matters. If you come out of the meetings in Argentina with some kind of agreement to keep talking, that might be fine. But the bigger point to me for the U.S. market is this was only one strand of what's been going on the last couple of months. You had this massive downward revaluation in very, very crowded big tech stocks. Sure. You had oil crash at the same time. None of these things are necessarily the same thing. So you have multiple forces, as well as this kind of mini panic over corporate debt happening all at the same time. And I think it's colored the sentiment to where we are right now.
Well, it does make you think about late cycle, end of cycle. Where are we on that spectrum?
Exactly. So there is a ton of sensitivity to any signals that the cycle is aging faster than we hope. Actually, the earnings report season was not universally as wonderful as we got used to the prior.
But it wasn't bad, and it
wasn't bad.
Hard to imagine we're in such a bearish place right now. 5.7% off the highs of the Dow. I mean, that's 2 or 3 days if things.
That is true.
So it's weird. Don't you feel it? It's versus
look,
2 weeks ago or a month ago.
When you have one of these correction phases that goes on for almost 2 months, and by the way, 2/3 of all stocks down 15-20%. Yeah. So it's not just the Dow down 5.7.
But end of cycle talk about end of bull markets, end of economic cycles, end of growth period, end of this, end of that, end of the at the very end of the debt cycle, we're all over leveraged now, consumer debt, and then all.
So the question is, are we headed off a cliff or not?
That move is bullish if it's not, in fact, over.
But the other weird part of that, Joe, is trying to figure out what this all means for the Fed, because people have been so concerned that the Fed is going to raise rates too quickly.
And
when
they
you start
should
to see things slowing down, and now this morning the 10-year note yielding below 3.1%. What does that tell you?
I mean, Michael talked about tech, he talked about oil, he talked about a bunch of things that's happening in the markets, credit. That's all Fed. That's the Fed raising rates relatively, very aggressive relative to the rest of the world. It's upwards of 50 billion of quantitative tightening per month. The ECB intending to next year not reinvest 30 billion. The market being anticipatory, Becky, is expecting there to be less liquidity, less hospitable investment conditions, and that is what largely, in my mind, is what's driving markets. And until the Fed more clearly backs away from what I believe is much too aggressive monetary policy, we're going to continue to have these worries, and we're going to be more concerned about being late cycle.
Did you hear what Rich Clarida, the Fed vice chairman,
said
here on Friday? Not enough because
not enough.
What?
Well, the Fed doesn't even know what neutral is. I mean, what is neutral? It's such a crazy concept.
Yeah, but the last time we heard from Jay Powell, we thought we were nowhere near neutral. To hear Clarida say, okay, we're reaching that area.
We are, but I mean, the thing is, neutral rates aren't directly observable. You only know what they are after the fact. And I would argue when you look at the housing market, it's clear that we're already past neutral. Housing would be doing better if rates were below neutral. They're not. So, I mean, Rich made some good points, but I don't believe the Fed has gone far enough in saying, look, we've done enough. Let's sit and wait. Let's see how things play out.
Mike, go ahead.
I was just going to say, look, the market doesn't like the fact that the people running the Fed believe their standing 2019 forecast leaves them plenty of room to pause for a while, to restart, to do whatever. There's 8 live meetings next year. They're talking 2 or 3, maybe with a move at this point, knowing what we know. And I think there's a period of attitude adjustment that has to happen if the data go in that direction. And maybe, look, the stock market and the Fed are kind of looking at 2 different sets of numbers in terms of figuring out what's good.
I take the stock market.
How do you define a Santa Claus rally? And
Very
when
important.
Okay, how do you define it? And what are the What's the likelihood?
I defer to the old time. The Santa Claus rally is only the days, I think, from Christmas Eve through the new year.
So not into Christmas, not from here into Christmas.
That's right.
Okay, let me just ask
It's not like as soon as the Macy's
What do you think
parade
the
is
chances are that the averages see new highs before the end of the year? I'm just wondering what you
I think they're less than
30%?
50-50. We get new highs. Higher than here is a decent shot.
Higher than here, but less than 50-50.
That we hit a new record
I was surprised,
high.
5.7% on the Dow. We could be mouthing, theoretically,
Yeah,
I don't know. We could be down, this could be the beginning of a horrible, something that we didn't anticipate.
It's
in the
time
correction.
for the seasonal spring.
Go ahead.
That spring-loaded move could happen still, but it's just not showing.
But it just wouldn't
to.
shock me if all of a sudden we're going, I can't believe we're at new highs again.
Well, except for that, I also saw over the weekend the Barron's cover. Was it 2007, 2008?
2008.
2008 with the battered bull down 30%.
It was November of 2000. Yeah, but the market was really, I mean, it was already down by a third by that point, and then it went down another 30%. I don't think it really resembles
And it
today.
was a picture of the bull with the battered bull with a thumbs
That's
up.
right.
And
Look, people are going to
still had a long
be
way.
people who work in the business are going to be net bullish, whether it's going down or going up. I think that's not necessarily a signal.